The real-time real estate segment is brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomedigest.com, rsrhomedigest.com. See exactly what the county recorder knows about your property, what the market believes about your property. Once a month email from your friends at Ron Siegel Radio, and it's totally free. Or if you're thinking about what your property is worth, you can also go to our other newest source, rsrhomescout.com, rsrhomescout.com. How global uncertainty is impacting mortgage rates. If you're thinking about buying or selling a home, you'll want to keep a pulse on what's happening with mortgage rates. It's not pretty right now. Rates have been climbing in recent months, especially since January of this year. And just a few weeks ago, the 30-year fixed mortgage rate from Freddie Mac approached 4% for the first time since May of 2019. But that climb has dropped slightly over the past few weeks. So let's take a look at that. And I'm going to, sometimes you get some of these reports, and especially from Freddie Mac, and they're always a little bit behind. But we're going to show this to you, and then I'm going to show you another chart as well. The recent decline in mortgage rates is primarily due to growing uncertainty around geopolitical tensions surrounding Russia and Ukraine, but experts say it's to be expected. Here's a look at how industry leaders are explaining the impact global uncertainty has on mortgage rates. Right? Remember, I told you a little earlier, they're up today. Odetta Cushy, Deputy Chief Economist of First American, says, quote, while mortgage rates trended upward in 2022, one unintended side effect of global uncertainty is that it often results in downward pressure on mortgage rates. In another interview, Cushy adds, quote, geopolitical events play an important role in impacting the long end of the yield curve and mortgage rates. For example, in the weeks following the Brexit vote in 2016, the U.S. Treasury bond yield declined and led to a corresponding decline in mortgage rates, unquote. Cushy's insights are a reminder that historically, economic uncertainty can impact the 10-year Treasury yield, which has a long-standing relationship with mortgage rates and is often considered a leading indicator of where rates are headed. Basically, events overseas can have an impact on mortgage rates here, and that's what we're seeing. Will mortgage rates stay down? No. While no one has a crystal ball to predict exactly what will happen with rates in the future, experts agree that this slight decline is temporary. Sam Cotter, Chief Economist of Freddie Mac, echoes Cushy's sentiments, but adds that the decline in rates will not last. Geopolitical tensions caused U.S. Treasury yields to recede, and that was the week that they did this, that they got this quote, leading to a drop in mortgage rates, while inflationary pressures remain. The cascading impacts of the war in Ukraine have created market uncertainty. Consequently, rates are expected to stay low in the short term, but will likely increase in the coming months. Rates will likely fluctuate in the short term based on what's happening globally. But before long, experts project rates will renew their climb. Bottom line, we're not seeing what is a normal market right now. Normally, that is exactly what we would expect to see. But because of the rates of inflation that we're seeing right here in the U.S., markets are not operating the way they normally would operate. And I shared with my team yesterday a new component that we have on rsrloans.com, rsrloans.com. And it actually shows what rates are being locked at on a daily basis. Now, Freddie Mac does their survey. I've told you this before. Freddie Mac's survey is they do it Monday through Wednesday. They report it on Thursday. So it's already outdated. The best I could get you was data from yesterday. Sorry, I don't have today's data yet. Day's not over. So as of yesterday, Ellie Mae, who is the largest loan origination software in the country, they've got a 35% market share. Loans were locked yesterday at 4.1% on a 30-year conforming rate loan. 4.1%. The day before, it was 4.04. The day before that, it was 4.125. Prior to that, 4.085. And when the report that I just gave you was written, 3.96. Now, it's gone from 3.96 on March 1st to 4.1 yesterday. So can't give you anything more current than that. And I forecast that they're going to continue going up because of inflation. And we're going to see the Federal Reserve wants to increase rates. So we'll see what happens. I don't think they're going to go with the half point that they said on the 16th, but they want to raise the rates. They should have been doing this a while ago. But that is the Real-Time Real Estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomedigest.com, rsrhomedigest.com, or rsrhomescout.com.